Hello there. My name is Igho Financials, and I will be your speaker for this course. Today, I will discuss strategic asset acquisition during economic crises. Now, firstly, let's take a look at what this course talks about. This course is designed to equip participants with a comprehensive understanding of how economic downturns create opportunities for strategic asset acquisition. Through this structured approach, learners will gain insights into identifying, evaluating, and capitalizing on assets available at reduced prices during challenging economic times. This course is presented to you by Igho Financials. You can check out the website at www.ighofinancials.blogspot.com, but for now, let's focus on the course. Take a look at the course outline. We will cover from understanding economic downturns, drivers of declining assets prices, types of assets acquired at reduced prices, benefits of acquiring assets at reduced prices, consideration and risks, and then actionable strategics involved. Understanding economic downturns, let's read. Understanding economic downturns is a pivotal module in the course. It delves into the core aspects of economic crises, covering the definition and characteristics, defining economic downturns and highlighting their distinct features such as reduced economic activity, increased unemployment, and market volatility. Causes and triggers. Exploring the various triggers behind economic crises, including market speculation, financial imbalances, geopolitical factors, or external shocks. Impacts on assets. Discussing how economic downturns affect different asset classes, leading to depreciating values and creating opportunities for acquisition. Strategic decision-making. Emphasizing the importance of strategic decision-making during such periods, highlighting the value of patience, analysis, and preparedness for capitalizing on opportunities. You should know this module aims to provide participants with a comprehensive understanding of economic downturns, enabling them to recognize the opportunities within the crisis and make informed decisions regarding asset acquisition. In Module 2, Drivers of Declining Asset Prices, the course will delve into the various factors that contribute to the reduction in asset values during economic downturns. This module aims to provide a detailed understanding of the forces behind depreciating asset prices, including 1. Supply-demand dynamics. Exploring how economic uncertainties impact consumer and business behavior, leading to decreased demand and an oversupply of assets in the market. 2. Investor sentiment. Discussing the role of fear, panic, and mass selling by investors during crises, contributing to distressed sales and lowering asset prices. 3. Tightened. Lending criteria. Understanding how financial institutions' stricter lending practices limit access to credit, reducing the number of potential buyers and further depressing asset prices. 4. Distressed sales by businesses. Examining how financial difficulties compel businesses to sell assets below market value to raise funds or pay off debt, creating opportunities for astute buyers. By comprehensively examining these drivers, participants will gain valuable insights into the complex dynamics that lead to reduced asset prices during economic downturns. This knowledge will aid in identifying and capitalizing on opportunities for strategic asset acquisition in such challenging times. Types of assets acquired at reduced prices. 1. Real estate. Property values tend to decline during crises, providing opportunities for individuals and investors to acquire residential or commercial properties at lower prices. 2. Stocks and equities. Market downturns lead to decreased stock prices, allowing investors to purchase shares of companies at discounted rates. 3. Distressed businesses. Economic crises can force struggling businesses to sell at reduced prices, offering opportunities for entrepreneurs or corporations to acquire them for strategic growth or restructuring. 4. Art and collectibles. Collectors or investors facing financial strain may sell valuable art pieces or collectibles, making them available at more affordable prices. 5. Intellectual property. Patents, trademarks, and copyrights might be available for acquisition at reduced prices during economic downturns, enabling expansion of intellectual property portfolios. 6. Commodities and raw materials. Prices of commodities like oil, metals, and agricultural products can decrease during economic crises, making them attractive for investment or acquisition. 7. Bonds and debt instruments. Market volatility can lead to reduced prices for bonds and debt instruments, presenting opportunities for investors seeking fixed income assets. 8. Real assets, infrastructure machinery. Infrastructure projects or machinery might become available at reduced prices due to decreased demand during economic downturns. 9. Real businesses and ventures. Established businesses or startup ventures may become available at lower valuations, attracting potential buyers looking for investment opportunities. 10. Non-traditional investments. Alternative investments like cryptocurrencies, collectible items, or unconventional assets might experience price reductions during economic uncertainties. These various asset types present opportunities for savvy investors, companies, and individuals to capitalize on reduced prices and build a diversified portfolio during economic crises. Benefits of acquiring assets at reduced prices. 1. Wealth accumulation. Acquiring undervalued assets offers the potential for significant wealth accumulation. Buying assets at lower cost allows for the building of a diverse portfolio. 2. Strategic expansion. For businesses, asset acquisition during crises presents opportunities for strategic expansion. Buying distressed assets or competitors can lead to market dominance and enhanced competitiveness. 3. Income generation. Assets obtained at reduced prices can generate income streams. Whether through rental properties, dividend-yielding stocks, or income-producing businesses, these assets can provide stability during uncertain economic times. 4. Long-term capital growth. The potential for long-term capital growth with undervalued assets is substantial. As markets recover and asset values appreciate, investors stand to realize significant capital gains. 5. Portfolio diversification. Acquiring assets at reduced prices facilitates portfolio diversification. Spreading investments across different asset classes and industries can reduce risk and enhance overall investment stability. 6. Opportunity for bargain deals. Buying assets at discounted prices can lead to acquiring high-value assets that might not have been affordable during stable economic periods. 7. Increased buying power. Acquiring assets at reduced prices increases an investor's or company's buying power, allowing them to secure more assets for the same amount of investment. 8. Negotiation leverage. Lower prices during economic crises often give buyers more negotiation leverage, enabling them to secure more favorable terms and conditions in transactions. 9. Preparation for recovery. Positioning with assets bought at reduced prices sets investors up for significant gains as markets recover and asset values increase, offering a competitive advantage. 10. Potential for strategic investments. Acquiring assets at reduced prices provides opportunities for strategic investments that align with long-term goals and growth strategies. Acquiring assets at reduced prices during economic downturns requires careful analysis, research, and strategic planning. But the benefits can be substantial for individuals, businesses, and investors willing to seize the opportunities presented by market disruptions. Considerations and risks. Considerations and risks are crucial factors to address when discussing asset acquisition during economic crises. 1. Economic uncertainty. Understanding the volatile nature of economic downturns. Evaluating the depth and duration of the crisis. Strategic decision-making amid uncertain market conditions. 2. Due diligence. Importance of thorough research and analysis before acquiring assets. Assessing the quality, condition, and potential appreciation of assets. Seeking expert advice to mitigate risks associated with undervalued assets. 3. Financing challenges. Assessing the difficulties in securing funding during economic crises. Evaluating alternative financing options amidst tightened lending criteria. balancing attractive asset prices with the availability of capital. 4. Legal and regulatory aspects, navigating the legal complexities of asset acquisitions, ensuring compliance with local laws and regulations, identifying potential liabilities associated with distressed assets. 5. Market recovery timelines, assessing the anticipated recovery period for various asset classes, aligning acquisition strategies with market recovery timelines, balancing short-term gains with long-term appreciation potential. Addressing these considerations and risks is essential for participants looking to capitalize on opportunities while mitigating potential downsides when acquiring assets at reduced prices during economic downturns. Here's an outline for the conclusion and actionable strategies section of the course. 1. Recap of key insights. Summarize the main points covered throughout the course. Highlight the significance of strategic asset acquisition during economic crises. 2. Strategies for effective asset acquisition. Identifying undervalued assets. Techniques to spot undervalued assets in various markets. Conducting thorough due diligence. Importance of in-depth research and assessment before acquisition. Leveraging financial resources. Strategies to secure funding or utilize available capital effectively. Navigating legal and regulatory aspects. Understanding legal complexities in asset acquisition. 3. Timing and patience. Emphasize the importance of patience and strategic timing in seizing opportunities. Discuss the potential benefits of waiting for the right moment to make acquisitions. 4. Diversification and risk management. Encourage diversifying asset acquisitions across different classes and industries. Highlight risk management strategies to mitigate potential downsides. 5. Long-term perspective. Emphasize the potential for long-term growth and wealth accumulation from acquired assets. Encourage a forward-looking approach beyond immediate economic crises. 6. Action plan for participants. Provide a checklist or actionable steps for participants to apply the learned strategies. Encourage participants to evaluate their own circumstances and formulate individualized plans. 7. Call to action. Motivate participants to leverage the knowledge gained and take proactive steps in asset acquisition. Encourage continued learning and adaptation to changing economic conditions. This section of the course aims to tie together the key learnings and provide actionable strategies that participants can immediately apply in identifying, evaluating, and acquiring undervalued assets during economic downturns. That will be all for this course. This course is presented to you by Igho Financials. You can check out the website at www.ighofinancials.blogspot.com at the top of this page, and feel free to send in your questions about this course to your tutor's email. It's below this page. On our next course, we will be studying the attraction of global talent, a key driver of economic growth. See you soon.